Auto loan delinquencies are rising, but fewer sounding the alarm bells. Phil LeBeau joins us now with more. Hey, Phil.
Hey, Joe, fewer sounding the alarm bells about auto delinquencies rising, in part because of the employment market right now. Here's the latest data from TransUnion, and for the third quarter, the 60-day delinquency rate jumped up to 1.65%, well above a year ago, and easily the highest since at least 2010, according to TransUnion. And for a refresher, we see auto loans and the amount being paid in near record highs right now. In the third quarter, the average amount borrowed just under $42,000, the average monthly payment $701. But at this point, those who track delinquency say they're not worried, in part because of the relatively strong job market.
If we get into a position where employment starts to be a challenge in the United States and unemployment increases, that is, I think, when the industry will really start to be concerned about a consumer's ability to pay their auto loans.
And remember what we saw back in the recession. A lot of people, they'll give up their apartment or their home before they give up their vehicle. Really a tale of two types of auto retailers right now. The online retailers like Carvana have completely fallen out of bed, in part because Carvana continues to see just a dire situation, at least near term. It's going to take them a while to get out of this. As for the traditional auto retailers, they're not at their 52-week highs, but they're certainly not feeling the same kind of pain that the online auto retailers are seeing right now as you take a look at AutoNation, Group 1, and Penske. So, guys, we're going to keep tracking this in terms of the delinquencies. But at this point, those who say, this is one of those where you got to say, oh, watch out, they're not at that point yet, in part because of the strong job market.
The supply, Phil, I think that has a lot to do with things, just the overall auto market, too. Every time I talk to anyone about it, it skews everything. I don't know if the demand is as tight as the supply, or as big a factor as the supply, continuing supply, used, pre-owned, whatever you want to call them, or new.
Right. The new vehicle really drives everything, and you're seeing greater inventory at dealerships. Certainly not where we were pre-pandemic, but you are seeing greater inventory. That, in turn, sort of gives a little bit of a cushion to the used market, because when it was so tight that there were no new vehicles, and I say no, very few new vehicles, a lot of people said, well, you know what, I'm just going to go and buy used, and that pushed up that market. That has eased a little bit.